Hi there, everyone, and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so the XJO fell off a bit today, coming down to close just maybe a little bit below support or just on support. Depends on how you want to look at it here. But basically, it is threatening the bottom of this channel once again. It's worked pretty hard, spent most of the day well below this level, but a late buy up in the last half an hour of trade. Saw it come back to close fairly close to it, right? Now, this is a very key level of our market, guys. If this level breaks, once again, we're fulfilling a double top pattern, but also we're starting to show signs of a potential bear market. Now, the technical signs aren't as clear on our market as they are on the US, though. So the technical signals over there are a little bit more scary than what we're seeing here. But nonetheless, if this level breaks, and I suspect we could easily get back down near 68 or even a touch lower than that. That's on the table. But if we hold these levels, guys, look, I just think we could whip around between here and 73 for a little while, especially while this Russia-Ukraine situation plays out. So, look, I'll get across to the US markets because at this stage, this is the chart that scares me the most, right? So, the US markets were closed overnight for a public holiday, but the futures at this stage are set to reopen at 42.88. Okay, that's where the futures are sitting right now. So if that eventuates, that opens right on this support level, okay, is what it's indicating. Now, if this level breaks, there's actually a lower peak, lower trough scenario here, which means they will be looking at a bear market, okay, or a bear trend forming on their market. So just be wary of that, guys. Look, will it happen? I don't know. I doubt it. All of this is coming down on the back of fear right now. Everything else in the background is still fairly positive for me. Coming out of this Russia situation, even interest rates don't really worry me too much right now. But look, at the end of the day, this Russian conflict could cause the market to crash again. And if that's the case, we could be heading into bear market territory. So that's just something we've got to be aware of, right? It's not something we trade today. There's a lot of coulds in that sentence. We could easily just hold 42.80 and rebound, right? So what I'm saying though, just to put it into perspective properly, is that we are at a key pivot point as of 42.80. A break of that level is a technical bearish signal. If it holds that level, then we'll be a little bit more bullish, obviously, right? So that's what a definition of a pivot point, and that's where we're at right now. The Nasdaq chart is very similar, right? If it does continue to fall and break through these levels down here, call it 13,000, call it 13,200, something around there, then yeah, they're also looking extremely bearish. So once again, let's see what tonight brings. Let's see what this Russian situation does to the markets, and just keep an eye on this pivot point. So obviously, the Russia-Ukraine situation continues to worsen. So at this stage, we're seeing Russia move into two provinces of Ukraine. Obviously, it's not as simple as that. It's not what they're calling an invasion. They're going into two provinces that have been a bit of a breakaway provinces for quite some time. Okay. So they're trying to frame Ukraine as the aggressor in there, which is quite interesting, right? So they're saying that they're moving into these two areas for peacekeeping functions, right? So look, it's just an interesting situation, guys. There's nothing's clean cut here, and it's really hard to predict what the market reactions are going to be in the coming days and weeks. So we are definitely in a situation of uncertainty. And I say this time and time again: the market can price in good news, can price in bad news very quickly, but the market does not like uncertainty. So in these situations where we're very uncertain on the outcome and how that could affect the world economy, well, the markets can get quite rough and quite volatile. Now, we're seeing the VIX and the XVI quite high, as high as it was in January when the markets corrected on the back of the Fed issues. So once again, we've just got to be very cautious right now. Volatility is high, anything's on the table, guys, right? And I'm happy to adjust my view on a daily basis on the back of this. So it's just a matter of watching the news as it comes out and just really reacting to what the market does, because you can't predict this. It's a very hard one to do. Okay, so what else is going on out there? To some positive news, guys. The weekly COVID cases came in today and they have dropped once again. So the weekly worldwide cases is what I've been watching very, very closely. That peaked at about 23 million, and it's now coming down to almost half of that, which is sitting at around that 13 million mark. Uh, Week on week, if this continues, we continue to see that big pullback on the daily cases, and that's really positive news overall, guys. Right? What that means is many people going back to work. Right? A lot of people that had to quarantine for their 2 weeks, 3 weeks, 4 weeks, whatever it ended up being, because it spreads around a household. It means all those people get to go back to work. It means that it goes a long way to help this supply chain issues that we're seeing out there, and hopefully help the inflation problem. So getting people back to work, getting things reopened, getting things moving again around the world is key. That's going to really help the mood of the markets once we get past this whole Russian situation. So inflation and interest rates obviously are a very big thing everyone's watching out for. We're all expecting the Fed to increase rates in the March meeting, which is in about 3 weeks' time. I don't think an increase in rates at this stage is going to be negative for markets. The markets have already priced in 5 rate hikes this year. Okay, so even if they do a 0.5% in March, I don't think the markets, if they do fall, they're not going to fall for long, right? I think the markets pretty much priced it in. What the markets might be a bit skittish around is if they start unwinding their balance sheet too quickly. Okay, that's getting a bit too hawkish then. So it's going to be interesting. That'd be the part that I'll be looking for in the Fed announcements coming in the next few months. We want to, and the Fed meeting minutes obviously, is we want to know a bit more about when they're going to start unwinding that balance sheet of theirs. And if they ever actually end up doing that, who knows, right? But that's what the markets are looking for. That's the hints we're looking for, and that's what the markets are going to react to. Now, the other bit of positive news we found this morning is, oh, not this morning, sorry, this week, is the Australian borders are starting to reopen. Okay, so that's huge, right? That means more immigration. That means students coming back. That means tourism coming back. Okay, so that's really good to hear, guys, and hopefully we don't get another influx of COVID here in Australia anytime soon, and we can continue on this positive path. Reporting season's been quite reasonable, guys, here also. I think there's been a bit of a cloud over the market with the Russian situation. We're not really seeing the moves we probably would see normally in a bullish market because the market's a bit scared off right now. So, but the reporting's been pretty good. Some stocks have been a bit cloudy around their forward guidance, but overall, we're not seeing any huge alarm bells here, guys, for the Australian market. We're a value-based market. We've got commodities up really, really high. Our dollar's low. We've got our borders reopening. We'll have immigration coming back in. I think this year we've actually got a lot going for us, right? So at the end of the day, our market's just back to where it was pre-COVID. All right, it hasn't really priced in any of this extra stimulus and things that have been thrown around, and so I think we've definitely got some upside potential here. It's going to come down to market sentiment in the short term, but into the medium to long term, I suspect, as long as we don't get another huge wave of COVID in the short term, markets should start recovering pretty quickly once this Russian tensions ease. So broadly, that's my view, guys. I'm still bullish medium to longer term, but short term, guys, just watch out. Anything's on the table. We could easily go into a bit of a sort of crash mode again, as we did through January. I suspect we're going to have a volatile year, guys. Okay, I think we're going to get back to that sort of real volatility as we saw pre-COVID. In the sense of we can get a couple of 10% corrections in a year, that type of thing, right? But overall, I suspect by year end, the Australian market will break into another all-time high and push a little bit further. All right. So that's where my view's at right now. Watch out in the short term, but at the bottom of all this, once we know what's happening with Russia and Ukraine, I'd see that as a pretty big buying opportunity. All right. That's where I'm at. Thanks for listening in. Take care and bye for now.